Hello and welcome back for another edition of London Direct. The markets are trying to figure out where the bottom is for the oil price at the moment, and I've got some real quality analysis for you from the head of basic resources at Marex Spectron, so take a listen. We've seen the price of oil slump in recent months. What is behind this move?
I can identify at least four major drivers. The first one is the increased energy efficiency of some key economies around the world. US, European Union, believe it or not, even China are doing very well in this respect. Less oil is used these days to produce the same amount of GDP. When we compare that to the last 5 or 10 years ago. So that's one of the reasons. Another reason I can identify is the global and very broad economic slowdown. US is a major exception here. The US economy is doing pretty well when compared to the rest of the world. However, this is not having any significant impact on the demand for oil because US managed to significantly reduce their dependency on imported oil in recent years. In fact, the US has increased their exports of oil, especially in the second and third quarters of 2014. It's a very peculiar timing. This is exactly when the collapse of the oil price began. And last but not least, it is the value of the US dollar in play here. A strong US dollar influences negatively the commodity prices. A strong US dollar erodes the purchasing power of the consumers of oil globally, outside of the US, of course. At the same time, a strong dollar incentivizes the producers of oil to keep producing, which obviously adds to the supply in a market which is already well supplied.
Yeah. The big question everyone wants to know is how low that price can go. Business Insider today had a piece saying that it could drop as low as $20 a barrel. $40 is being mooted. Is 50 the magic mark? 'Cause it dipped below 50 and it's bounced back up.
When we search for a floor, we should always consider the cost of production of a barrel. Right now, at $50 per barrel, that's more or less where we are at the moment. 24% of the global crude oil production capacity is unprofitable. If the oil price drops another $10 to $40, this will mean that roughly half of the total global crude oil production capacity will be unprofitable. In other words, in the next couple of months, we're looking for the producers high up on the cost curve to start reducing output. I can say it in a different way. The lower the price goes from here, the stronger the rebound will be after that. Yeah. We see already signs of this happening. Russia, for example, reduced exports in the fourth quarter of 2014 year-on-year basis by 4.5%. OPEC, excluding Iraq, reduced the output by 3.5% in the last quarter of last year. So this is already happening.
OPEC and the OPEC nations have been seen as the key driver to the oversupply at the moment, particularly Saudi Arabia. What do you think is driving the mindset of the Saudis at the moment?
it is a very complex question to answer. I'm not sure I'm in a position and in the knowledge.
But do you think they're not happy, but they're content to see that the low price maybe putting the shale producers in a difficult situation?
The shale producers are only a fraction of the high of the high cost producers. So if somebody is trying to punish the shale oil production, specifically in the US, this is an attempt which will not bring the needed results. Some much bigger producers of oil are higher up on a cost curve of production. I can name a few: Brazil, Mexico, the Canadian oil sands. So shale oil is only a small part of this 23 to 50% of unprofitable capacity I mentioned earlier.
Yep. Just to finish off, if I come here in December and we look back over 2015 and the oil price, where do you think our oil price will be standing at that point?
We believe that we're very close to the bottom of the crude oil market in terms of price, and I believe that in the second half of 2015 we will see higher prices than where we are at the moment.
But can you be a bit more precise? Will we be back towards that $100 a barrel mark?
No, I really doubt that this will be the case.
Well, that's it for the moment. Stay tuned to Dukescopy TV for more interviews and analysis, but for now, goodbye from London.